The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm Neil Himmelstein, and our code is choice, organization, direction, and education. We specialize in insurance products and work with advisors, hundreds of advisors all over the United States. In our areas of specialty are life insurance, long-term care insurance, disability, and fixed annuities and index annuities. That's what we do. You know, in past episodes, we talked about guaranteed income you can't outlive. We also talked about life insurance and some of the living benefits, and also talked about having the only tax-deferred, tax-free asset you can have for income at retirement happens to be life insurance, and happens to be leveraged and takes care of you if you live too long, if you die too soon, or you need money along the way. And wouldn't it be great to have tax-free income for as long as you can live? We also talked about long-term care and the need for long-term care, and I talked about my own personal story in dealing with that with my folks. And we talked about income protection, disability insurance, and different types of income protection we can do. Today, I want to do a deep dive into how to protect yourself for long-term care. For those of you who don't know what long-term care insurance or long-term care coverage is it is simply that if you can't perform 2 out of 6 activities of daily living, you're considered to need some sort of long-term care or assistance. Now, after we reach the age of 65, the odds are that 70% of people, individuals, will need some sort of long-term care, either in their home or in some sort of facility. Now, the other 30% of us will need to take care of that 70%. And believe me, if you've lived my life or many lives, or you may know people, that the cost of long-term care is extremely expensive. Health insurance, if you have, let's say you get injured, only covers you for what's medically necessary. Being able to get out of a chair, bathe oneself, go from one place to another, all require additional assistance that health insurance doesn't cover. And as we get older, if we're relying on another person to bathe us, to take our wheelchair, to put it in a car, to get us to different places, or if we have a memory issue, we need to hire people to help us or rely on ourselves or our children. And the problem is that can be very costly. Even in home, for instance, if you had somebody for $20 an hour and you needed somebody for 24 hours of care, that's almost $500 a day. Okay? Or if worse comes to worse, you end up in a facility like a nursing home. I mean, there's assisted living and there's various degrees, but nursing home costs in Long Island, per se, are $400 to $500 per day in a semi-private room. which if you equate that out to a year, it's quite a big number. How many days can you afford that? So over the years, they developed what they call long-term care insurance that will cover those expenses. And what long-term care insurance does, it gives you an option. It gives you somebody to call when you have a crisis. There's the old commercials, I can't get up. Well, what if you can't get up? Can your partner lift you up? Or if you live alone, what are you going to do? How are you going to take care of yourself? So for those that are single facing this, you got a big problem unless you protect yourself. And for those that are couples, if you look at the odds, 91%. The odds are 91%. So only a 9% chance that one of you won't need long-term care. That's a really big number. So what are the different ways of protecting yourself? And this is where I want to do a deep dive. So the first way is, I have plenty of assets. I can afford to do this. Well, if you do the math, you got to have a lot of assets, because long-term care, they used to say it was about 3 years. Now it can be 8 years, 10 years. It can be the rest of your life. It can be 15 or 20 years where you're going to need assistance to take care of things. Medical science has figured out a way to keep us alive much longer and with impairments, but you're going to need assistance. So even if you've accumulated great assets, having that call, having that protection may be a better option, because you have somebody to call and somebody to coordinate your care. Very important. One of the other ways is I'm going to rely on the government. The government option is called Medicaid. For those of you who don't know, we're not talking about Medicare, we're talking about Medicaid. Medicaid, you need to get rid of all your assets and impoverish yourself to get Medicaid or government assistance. Medicaid is the number one supplier of long-term care needs in the country. It is very expensive. Now, if I'm relying on the government for Medicaid, and they're going to take the least expensive option for my care. So what does that mean? If I need a nursing home, for instance, they will pick a nursing home in a semi-private room somewhere. It may not even be near where I live. Let's say if I live on Long Island, it may be in Westchester. And they will take you to the least expensive place where they can house you. And by the way, in the COVID crisis, where was our biggest crisis but in nursing homes, and mostly Medicaid nursing homes, where, quite frankly, the care that you would want for yourself or for your loved ones may not be up to your standards and may not be to your liking. So Medicaid, I don't have money to buy anything, I'm going to rely on the government. Well, the government can choose how much they can do. And they have at-home benefits, but we don't know how long they're going to last. A lot of people go to an elder attorney and they do Medicaid planning and they transfer assets. Well, that was good for 5 years where you can claw back, they could claw back money. Now, New York State has just changed the law, so you can't transfer. There's a 2.5-year clawback. So if you're trying to hide money and transfer it around to get on Medicaid, they can claw back that money if you've made deposits in the last 2.5 years. The third option is to buy some sort of insurance, and within the insurance realm, there are many different options now of protecting yourself against long-term care, and I'm going to go through those options in quite detail. So the first option would be to purchase a standalone, what we call a standalone policy. There's not that many of them left in New York. There are a few companies that offer a standalone policy. Basically, what the standalone policy says is I can buy a bucket of money. Let's say typically we look at $10,000 a month for 3 years, and that'll come out to $360,000 of coverage, and I can purchase this with a premium with lots of benefits tied to that standalone policy, which will cover me for in-home, assisted living, or nursing home. Now, the way we structure these is we like to have the in-home care at a 0-day wait. So if I need it, I can get care immediately. And I'll go into more details as soon as we come back from our commercial. Welcome to the Main Street Code for Financial Success. This is Neil Himmelstein. I can be reached at 631-647-4694 or mainstreetplanninggroup.com. Welcome back. You're listening to the Main Street Code for Financial Success. This is Neil Himmelstein. I can be reached at 631-647-4694 or my website, mainstreetplanninggroup.com. We advise hundreds of financial advisors across the country in the areas of life insurance, long-term care, disability, and annuities. If you're just coming back from commercial, we were discussing long-term care insurance and protecting yourself against long-term care. Very briefly, we talked about self-insuring and what the risks are in self-insuring. The costs associated with that are quite deep, and quite candidly, you don't have someone to call if you have a problem, and that's a big deal. We talked about Medicaid briefly. Medicaid, you basically have to impoverish yourself to get Medicaid, which is government assistance to pay for your care. And government assistance is limited at home, what they can pay. And if you should need a nursing home, they will pick which nursing home you go to at their discretion in a semi-private room. And we discussed that. And finally, we talked about how do I purchase some sort of insurance for myself, and I started to talk about individual, what we call standalone long-term care policy. And the way the standalone long-term care policies work is you can buy a bucket of money. So let's say typically we like to use a 3-year benefit because of the transfer rules of assets, up to a 5-year benefit. They're now capped. They used to be unlimited, but they realized the insurance companies had a hard time paying unlimited benefits because when they set up long-term care, they thought, all the actuaries thought you'd only need care for 3 years, but truthfully, we're finding you need care for 8 years, 10 years, 12 years, sometimes for the rest of your life, because medical science has been able to keep us around a lot longer. We know how to deal with heart attacks now. 25 years ago, we didn't. Diabetes, we know how to control it. Cancer even, we're coming back from cancers. And however, that doesn't mean we don't need care. We need it more than ever. We don't know the long-term effects of COVID, whether it's going to affect our lungs, what we're going to need later down the road, and many other things. So they found ways of keeping us alive a long time, which means that we need to protect our assets with some sort of long-term care insurance, which I believe is the best option. But there's many ways today to buy it. So in a standalone policy, we typically buy a length of time and amount per month. And so for argument's sake, a typical policy would be up to $10,000 a month and a 3-year benefit. Just for details. Now, these policies will cover you at home, in an assisted living, or a nursing home, but typically we like to look at $10,000 a month and 3 years benefit, which would adequately cover a great deal of assets. Now, if you have some assets that you're going to self-insure, then we can look at a lower amount. Or if you don't, we can look at a higher amount. But again, this is all how it relates to cost. There's a discount if you apply as couples. And we like to put the at-home benefit at a 0-day wait. And typically, all these things go into the cost of a long-term care policy. We'll set it up so there's a 90-day waiting period for nursing home or assisted living, because your medical insurance and Medicare typically will cover the first 100 days of care medically. It's the other type of care that we need long-term care insurance for that medical insurance doesn't cover, and that's bathing or getting up out of your chair or traveling or many other different things, what we call activities of daily living. So there's the standalone policies originally, and now there are other types of policies. You can buy long-term care as a rider to your life insurance policy now. Now, what does that mean? So your life insurance policy could, let's say, have a death benefit of $500,000, and you could buy a long-term care rider which says if I need long-term care, I can access that policy for my long-term care benefits, and it will pull dollar from dollar from that $500,000, let's say, to pay for your long-term care needs. So if you need, let's say, $100,000 of long-term care, and you have this $500,000 policy with this rider, okay, then what will happen is the $500,000 death benefit will go down to $400,000 death benefit. So you'll still leave money behind for your heirs, or if you never need the long-term care, the whole $500,000 will go to your beneficiaries as your legacy. We like these programs. We think they're very good. Now, some of the differences between long-term care coverage between even the rider or the standalone is some of the money gets paid out as indemnity, or some is called reimbursement. Very quickly, let me go through the differences. Reimbursement says that I basically provide the bills, or if I have a service, I can say, here's what the service costs, and they will pay the servicing company, or they will reimburse me at the end of the month. Okay. Indemnity is they'll pay cash. Now, why would I want indemnity versus reimbursement? Well, cash is king. One of the great things about getting cash is you can have it paid to your daughter or your son or your spouse or a homemaker or somebody doing your lawn. It doesn't need to be a skilled person for that cash indemnity benefit. One of the negatives of indemnity and one of the advantages of reimbursement is once they give you the cash, it's up to you to spend it wisely. Or your loved one, if you're under mental incapacity and you're depending on your loved one to spend your money, and they get this money in, are they going to use it for your care, or are they going to use it for their bills? Very interesting, and happens. However, with reimbursement, one of the things that you get is you typically get a care coordinator behind the scenes who can help you assess what your needs are, whether you need a ramp in your house or you need bars for your bathroom so you can stand up or do other things. They will help you with that matter. So those are two areas. So with a long-term care rider on a life insurance policy, the third way you could buy long-term care coverage is what we call an asset-based program, which will have a little bit of life insurance, but mainly long-term care, and you usually do that with a lump sum of money. So they have products out there like MoneyGuard is a typical example that's been around and a very big provider of long-term care, and you would give them a lump sum of money. Now they've changed it so you could do it over 10 years or one lump sum payment at once. The beauty of it is if you don't need the care, there's the death benefit, and if you don't want it anymore, most of them will allow you to get some or all of your money back, some with interest, some without. And that's what an asset-based care program. Now, outside New York, there's actually a fourth method of getting long-term care coverage where they actually have it as part of an annuity so that your money grows, but if you need the long-term care, they won't amplify the amount that you can get, whether it's 2 times your deposit or 3 times your deposit. That's how they work, but they're not in the state of New York. But for our listeners outside New York, those products are available. You've been listening to the Main Street Code for Financial Success. My name is Neil Himmelstein, and I can be reached at 631-647-4694, or you can email me, or you can look at my website at mainstreetplanninggroup.com. I hope you found this helpful, and I look forward to having a blessed day. Thanks again.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.